Good afternoon, everyone. Welcome to the insightful session on GST 2.0, the next big leap in India's indirect tax reform. I'm Tanvi, and I'm pleased to host today's discussion on behalf of Binary Semantics. Over the past few weeks, we have heard policy leaders and industry experts talk about GST 2.0 as not just a tax update, but a structural reform, one that shifts narrative from ease of doing business to a reducing the cost of doing business. What we have seen so far from GST 2.0 is a simplified tax structure, refund changes, and compliance major shifts, all of which are now going to be driven by technology. We have seen a shift towards transparency and automated claim. GST 2.0 marks not just a policy update, but it's a shift towards India's tax system, making it more simpler, faster, and smarter. In today's session, we'll decode these transitions, interpret the recent council decisions, and discuss how it's going to affect your day-to-day working and how businesses can adapt to the evolving compliance ecosystem. We have with us CA Kanika Malhotra, indirect tax expert at Binary Semantics, who will walk through the whole session with technical, procedural, and system level changes that are going to impact you by the GST 2.0. But before we dive in, a quick note, request you to kindly share your questions in the Q&A box during the session, and we'll take them live during the session or towards the end of the session. Now handing it over to Kanika.
Yeah, hi. Thank you, Tanvi, first of all. And hi, good afternoon, everyone. Welcome, all of you. This is CA Kanika Malhotra, and I'd like to extend a warm welcome to all the participants that have joined this session, this exclusive webinar on GST 2.0, where we'll be discussing the new era of indirect taxation in India. Just to start with, as we all know that GST has taken its shape from the year 2017, where the agenda was one tax, one nation. And though it has a unified tax structure, but it's had some inbuilt complex tax rates and the compliance burdens. So moving ahead with that, and with so many years that have been driven, we are in 2025, and where on 15th August 2025, where our Honorable Prime Minister has tried to bring some new reforms, a different shape to this GST that will be add on as a GST 2.0. That will be simply a Bharat transformative reform, where the new structural, which has the introduction for the next generation GST reforms. Here, basically, purposefully, four big agendas has been brought in that have been rolled out through the 56th GST Council meetings. Here, the first of all, the main agenda was the rationalized tax structure. This is just to bring the equilibrium between the whole tax structures. Though we say that it is one tax, one nation, we'll try to achieve it. With this, we have diversified majority of our products into two slab rates. That is 5% and 18%. Though through some tax rates are still driven, some products are still underlined under 28%. That is pan masala tobacco, unmanufactured tobacco, and under the 28%, and for the 12% as well, like bricks and other things. This is just basically focusing the common man needs, because things are becoming complex and complex day by day for the to address the common man needs, and India is trying to shape to reduce those tax burdens, that to take out that money from their particular pocket. So here, this is the first major reform that has been brought into through this GST 2.0. The second major reform is the fast track registration. As we are being the participants, as we are the obedient taxpayers, the abiding the law, here the having a registration, GST registration, is becoming a very difficult task these days. So many weeks pass on, things pile up at the authorities. We need to file multiple reminders, show cause notice, responses, leading just a 2 to 5 days process into many weeks. So this has been a biggest challenge which the government has addressed, because here the main person who is suffering is the small taxpayers who want to start their business, have a motivation, so they need to start it there, where government has simply given a 3-day registration. In this, only the small taxpayers who has a B2B, that is business to business, sales outward supplies, which to the registered taxpayers in a month is not exceeding 2.5 lakhs. So these type of small taxpayers are covered under this, so that they do not face any harassment or any delays further to initiate their business and follow the procedures. Second, additional benefit is giving to the e-commerce suppliers, where the suppliers have to take multiple registrations in different states due to their interstate supplies. There, the thing is they need to have a principal place of business, and this is very difficult for them, as they have their warehouses at one place from which they try to circulate their things, but due to legalities, the requirements under the law, they need to have registration in each and every state. So this has also been addressed. The things have been understood, the grievances have been reached to the government, and they have channelized this thing, not making it mandatory to have a principal place of business in each state where the entities are registered. So these are the major things that has been given a very relief to these taxpayers who are small and want to make a run business abiding all these GST regulations. Third is the speedy refunds. Refunds is the major thing that is really a fuel that is required by any business, where we are giving exports to the government, and we are trying where we cannot use all our inputs, as our zero rated supplies are 100% exempted. We do not need to pay any tax. So for just taking a refund in the inverted rate structure mechanism, which we'll also take it up in detail in the further slides. So here I'm just giving you an idea about it, that refunds, 90% refunds would be issued on the provisional basis. And last but not the least, the most awaited appellate tribunal, GST appellate tribunal, that was really required to address all the grievances, all the unsatisfactory decisions that has been taken by uh, the lower authorities, which are either not in the favor of the department or not in the favor of the tax suppliers. So this has been addressed, and it has already been launched in September 2025. The This portal is running very successfully, where and this is a, I think, biggest example of automation, how the government is introducing everything through the automation, maintaining everything on such a large scale, that now not only the e-invoicing but the IMS as well, with such a bulk data, as we are massive in numbers, and being the first in all over the world, our technology, our automation in terms of GST is the best out of anywhere. All other countries, either you talk in the Saudi or the Malaysia, whatever, they all are lagging behind and see us as a benchmark to reach out to that destination. This GSTAT has already been activated in September 2025. Moreover, the commencement of the appeals hearings would start the late of this year, that is December 31st December 2025, and all the cases that has been pending still so far will be taken care of till 30th June 2026. So this is the whole structure, that how transformation will be going to take a lead in all the scenarios, in all the major segments. Now moving on into the detailed segments, where the rate rationalization has taken its shape, is like I've already discussed, the main impact would be on the common man needs, like the FMCG products like toothpaste, hair oil, your consumables, your day-to-day needs like automobile industry, the electronic industry. All these rates have been driven from 28 to 18, or 12 to 5, so that a uniform structure, a reasonable tax structure is there. And the main thing is just to aim, this rate rationalization is aiming is to have a correct tax inversions across the value chain, and here the to promote a neutral tax structure. So this is basically the thing that is being followed. Another reform that has been taken place is by removal of the compensation cess. Just to have, I've already having said that we have a neutral tax system. So just to compensate, the goods have been just parceled unto the luxury with a tax bracket of 40%, like carbonated beverages, the unactionable claims, the non-alcoholic beverages. All these have been rooted here. I'll just give a small example here under the terms of luxury, where big cars are were charged. As you already know that who has taken all the big cars, GST compensation was levied on that. So supposedly the GST on the car was 28%. The compensation says was ranging from 17 to 22%, making a total tax bracket of 40 to 50%. That was really a hardship on the consumers affording the automobiles. This was a really, so now they have shifted this drift to a lower rate of 40%, having a uniformity in all those things. Now, the sin goods, as already discussed, this has been reached to a level of 28%. And this is important also from a government eyes view, that just to under the noble cause that people should hesitate in investing in all such items. So I think that's a fair things that needed to be taken care of. And the used motor vehicles, only a schedule change has been done, where from the schedule 4, the things has been distributed under schedule 2 and schedule 3 of CGST Act. And moving on to the bricks and tiles, they still have a rate of 12%, though it is a unified tax structure with just only two slabs, but few items just to maintain such a wholesome, complicated, complex tax structures. These things are still defined under very small segments. And moving on to these services. Services, 18% tax rate is there. Even in job work services, majority falls under the 18%, but a few segments still fall under 5%. The transportation services also, where multimodal transportations are there, and where only other than any air transportation, it is a flat rate of 5% with GST. But in case in the multimodal transportation, in any leg, if you have this air transport included, then the rates change to directly to 18% with GST. So, with all those things, I think things have been wrapped up, keeping in mind for everybody's benefit, that everything should be maintained on a streamlined level. Now, a change in the RCM has also been brought for the e-commerce suppliers, where the local delivery services, those who are unregistered and just delivered in the same state, then e-commerce has been settled. They are liable to pay their taxes on their behalf. But here, likewise, I said the registered local delivery suppliers who are registered and delivering in even in the same state, they do not need to pay, the e-commerce operators do not need to pay tax on RCM basis, and they would be charged on the forward basis. So this is, I think, a comprehensive tax structure understanding that is to be made, like how the things are falling, what rates, because this has been a very basic question. GST has reduced, how it has reduced, on what articles it has reduced. So I think this will give a complete overview to all of you that all these things are at a lesser rate. Even now, you shop for, you account for in your books of accounts, you know that what invoice has been raised by your vendors, and whether just proper this allocation of this burden taxation has been properly segregated and has been reduced or not. Now, moving on to the second leg, that is the time of supply. We have discussed the rates, all the rates that have changed. But in the GST Act, Section 14 is the one where it rules out that which is that date where which GST rate has to be implicated, because we have different legs of transactions following under this category, where the goods and services are supplied, where the invoice is issued, where the payment is received. So in all these three legs, we need to decide that which is the date that where we need to take that applicable rate. Here, for your understanding and according what I have assessed and analyzed, that where the things are barging and where people need clarity about all these things, I have drawn three examples, very easy examples for your understanding, which I think will going to answer majority of your queries. So the first scenario is where the supply of the goods or services has been made on 20th September. That is before the date of change in rate of taxation that you must be aware, that is 22nd September. Here I'll just add one more point which I have missed earlier in detail. That this notification, this GST Council meeting, 56th GST Council meeting, for all these tax reforms that I've just discussed in the previous slides, these will be applicable from 22nd of September 2025. So keeping in mind 22nd September 2025, before and after case scenarios. So here I'll take the example. The supply has been made on 20th September and the invoice and the payment has been received after the rate of change in taxes, that is after 22nd September. So in this case, where the payments and this and the invoices have been generated afterwards, then the new rate would be applicable. I hope this set of query is I think addressed from all your end if you have any. And even you can post any of your question and answers here on the chat box, that if you have any specific query, any kind of scenario for yourself. So we're going to check in later on at the end of the session or in between as you feel like. The second, basically, the case scenario is where you have not supplied any services. You suppose an example of subscription of the SaaS, software as a service. So if you have taken any subscription, I think subscriptions are almost for full 1 year. So you have raised that invoice on 18th September, though the GST rate was 18% at that time. Now, the payments and the services would commence on a later period. Payment was made on the 25th, and the services would commence on the 1st of October onwards till September 2026. So, here in this case, the invoice need not to be changed. That will be applicable on the older rates. Here, the catch is that yes, if there's any expansion, extension, or any upgradation of your services that you need to address that have a carrying some charge, in that case, a fresh invoice with the new rates will be issued, and I think accordingly it will be managed. The third case scenario is for the reduction. Suppose we have received an advance. We have received an advance on 15th September, and the rates have reduced from 28 to 18%. This will basically, advance receipt will apply only on the case of services and not in the case of goods. As under noted, as you must be already aware that under notification number 66 2017, advances no GST is leviable where any advance is received in cases of the goods supplied. So here we have received an advance. Coming back to my third example, we have received an advance in relation to a service where the rates have been reduced from 28 to 18 on 15th of September. Now the invoice was raised on 26th and the supply was made on 27th. So here all these legs of this invoices and payments are being addressed after the rate and change of taxes. So here a credit note needs to be issued, and you must be aware that you must get the advantage of this reduction in the taxes, and you are I think have the right and liable to ask your vendor to give a credit note to reduce the taxation so far. I hope I have addressed many queries of yours, a confusion that usually people arise with, that in how these things should be dealt. In case you have any question, we can answer it.
I know this has been overwhelming for you all. So we are just doing a short poll. Request you to just try answering these questions. We have got few questions from the people. So one of our questions have been for goods the invoice raised by the vendor is on 20th September, and they have received the goods on 25th of September. So which rate of tax would be applicable to them?
So just reiterating the question, the goods have been received on 20th. The invoice has been raised on 20th and the goods have been received on 25th. So here the invoices has been raised there. I just needed to know like when the supply is made afterwards, after the 20th, that is 22nd, that is change in the rate of taxes. So whichever is later, Like if you have received, if you have issued the invoice, or if you have made that payment after 22nd, so whichever that leg is later would be the deciding the decisive of the date. Here I assume that payment is yet to be made, and payment definitely would be made after once you have received the good, that is 25th of September. So here after 25th, whatever the new rate I think would be applicable, so that rate would be applicable for your case.
So there's another question. If the bill is generated on 20th September, the payment I receive accordingly will be of new GST implants or the old guidelines.
So here I just need addressing the second question where you've asked me, like we have raised the bill on 20th and the payment is received post 22nd, correct? Here you need to specify it is like what kind of service is this? Is it goods or services? Give a proper detailed scenario of yours and we're going to address this later. We can answer you personally as well. If you have any such questions, you can put all the details regarding what type of goods or services you are handling, the date of the invoice, the date of receiving the goods or services rendered, and the date of payment. All these things should be mentioned over there. So accordingly, we're going to answer it. And even if you specify the HSN codes, we can even tell you that what rate would be applicable over there. So that is not a problem. You can drop your queries over there. So I think now I would like to proceed further with this thing. Now the fourth leg, that is the dispute resolution, that is the GSTAT we have already discussed. Here the thing is this GSTAT I've already mentioned that when it will going to, it has already been streamlined on the portal from the September, and hearings have also will begin shortly in some duration of time. And the limitation period is exactly that your old cases will be dealt. You have the opportunity where you are not satisfied with the decisions that have been made and you are aggrieved of those decisions and you do not move on to the high courts or further, because moving into such litigation is not just only a tax burden, a cost burden, but also very cumbersome in terms of timelines. So people try, usually big jargons take that risk also because a huge amount is involved in that. So we can understand that they have that capacities, but understanding from a small vendor's point of view, small taxpayer point of view, it is very difficult to get into such litigations to such an extent. And keeping in scenarios that how the things would have been placed in this 2 3 years, so many cases have been opened up, so many audits have been conducted, that it is really becoming challenging on the part that just to meet the deadlines by the department, intentionally they have raised such kind of notices which are very vague and are not having serving natural justice. So like just to meet out them and just to having a resolution towards all these, so this GSTAT would definitely going to help you out, that if you are aggrieved of any decisions of the lower authorities, you can come ahead and you can file your case. If you, and all those details, if you have the particular details like the ARN, you have already, it is there. While I was walking, having a walkthrough of all that, you just need to mention the ARN. You just need to specify that the appeal needs to file on an application. Then your whole case, what was the decision, what was the reasoning was given, when it happened, what was the amount, the all those things would are already accumulated there, already in store there for you. So it is really a very big move, full of automation, less of hindrances, less of physical paperwork, that would really help the people to understand and move litigation and this resolution of the disputes in a very effective and efficient manner. So now moving on to the structure. Here the structure, it is like it is a central tribunal with all the regional benches with two judges, basically the two members, that is judicial and technical. Reason for this is just to enable to understand that all the aspects in that dispute is being addressed, not only from the GST taxation point of view, but from the technicalities also, that what are the issues that are being suffered not only the bookish adherence of the law, but actually the practicality of that situation, of that circumstance that led to that scenario. The usually e-way bill cases are more falling under the situations and analysis, and the e-invoicing and other aspects also. I'll not get into that much detail right now. We'll have a separate session sometime. So here it is like things are to be dealt in that manner. And similarly, all the orders, like for the classification issues, for which we used to take the advanced rulings that were specifically for us, the input tax, the demand, the interest penalties, waivers, all these things are addressed very conveniently here in a very short span of time. All the things would be addressed here. And yes, we have our forum finally in the in front of us, where we can go and reach out to all these things, and we can get some good I think redressals for all the issues that you're facing these days. And basically it is very difficult to move to the high courts and supreme courts, I've already mentioned. So this would be the whole, I think the system that will definitely lead to somewhere better resolutions. And when the things are being recorded in such automated manner, I think the prejudice that has been done by the authorities on the tax records would definitely get reduced, because somewhere the records would be maintained and things would be analyzed and even channelized across the streams. So I think that would be a overall control for everybody. Now moving on to the next slide. Now the hot topic is the industry challenges. I think from the 15th August onwards, when people get a shocker from the Prime Minister, our Honorable Prime Minister Narendra Modi, that yes, GST 2.0 would be given, reforms would be made. So in that way, the wave was already there. But a little fire was given by the 56th General Council meeting, when all these things were, brought in by the council meeting, and finally the notifications came into role, applying from the 22nd September onwards. So here the major issue, which I think we have already discussed, the common man needs, is the inventory and the MRP realignment. It is not only the FMCG that has been impacted so badly, it is also the manufacturing industries, because India is a mass for consumer products, and these products bear a MRP tags, as you already aware. Either it is a Levi jeans that you have a tag, either it is a biscuit packet, either it is anything that is having a tag over it. So even not only the GST things need to be followed, the Legal Metrology Act is also being followed. These MRP guidelines that needed to include all these things have certain parameters that needed to met by these manufacturers. And moreover, the responsibility basically is to be moved on to the shoulders of the manufacturers, because this is something their responsibility, where the inventory what they're maintaining, having a correct declaration of the MRP with a proper, not no overlapping, no stamping, no fixing like that. It should be clearly depicted over that tags that needed to be maintained. And this was getting very challenging for them also to maintain, because abundantly stocks is being distributed. So it is very difficult, though tagging would be done to an extent, where government have also given some relaxation through the circular, like for the goods which are already in stock and which are still not consumed, has to be done by 31st March 2026. Though even this date it's crossed, they're still having some stock in their hands, some inventory is present there with them, with the old. So they need to still carry forward this thing in for the future. So this is the major thing, MRP revision responsibility. And ease was also given, because industry was very having this was a pain area for the manufacturers and the industrialists, that how to tackle such kind of masses with all these having, if you cannot reach out to single person, right? You can understand that. So just to understand, they bring a reform that a pamphlet, a paper where all those details of the revised MRPs, the old MRPs, all those details would be mentioned and would be pasted outside the retailer shop, so that the consumers should have an eye over it. You should be clearly understand that these were the rates and these were the shifts revised prices that the consumers, it would be charged from their consumers pocket. And the another important aspect was the pass on benefits, because till the time you are aware that this tax reduction has benefited you or has been passed on to you, how come you know? Like, I've also seen various LinkedIn posts some time back that even though these MRPs has been reduced, but what they have done, the rate GST rates have been reduced, but they have revised their MRPs just to maintain that stock thing. I think this way abhi right now, this is not catering the needs of the people, but definitely after, I think after this inventory thing is being managed by them, this would be, I think, in circulation in a better way, that how the grammage should be done, how the things are to be done, because not only the GST laws is needed to be adhered here, but also the anti-profiteering measures are needed to be taken care of very seriously and sincerely. So now I think this reduction in the tax rates from the two slabs, like from the 28 to 18, from the 12 to 5. So this is also a dramatic shift and actually pose a cash flow crunch, for the industries, because you have purchased some inventory at a higher rate, you have blocked that amount, and now you have to release those products, finished goods, in a lesser rate. So to meet that, to match up that is also very difficult, and definitely it will going to pose some hindrance also to manage their working capital till the time the things are aligned in a certain period of time. Now, the third important topic is the inventory duty and the ITC accumulation. What I told you in the previous slides, that inventory duty structure needs to be understood very clearly, because people are trying to mix it, complicate it. Like if the rates have been reduced, we should get a refund. No, you cannot. Inverted duty structures are the things where you are eligible for the refund. That is also the case scenario where your input supplies are chargeable at a lower rate, suppose 5%, and your outward supply, that is your product that you are actually for floating in the market, is at a higher rate, suppose 18%. So this is the gap of this 5 and 18, how to meet, because their main product is at charged at 18, sorry, my bad. Inward supplies is at 18 and the outward it is at 5. So this gap is to be met. How it should be met? Majorly are the export suppliers. So just to promote the export also, so this benefit was extended by the government towards them, towards the exporters, for the zero rated supplies, that yes, you are eligible to claim the refund for the input that you have used in making that outward supply. So this is the scenario that is being catered here, and has the eligibility and the right to claim a refund. But the taxation, the rates change due to the timeline change, like 22nd September. Before it was at 28, after it was at 18, or 5%, whatever the rates. This is really not covered under this refund procedures. Like suppose you have reversals are also needed to be done, and I think it is majorly done where exempted goods are also done. Like for example, I'm going to take one example. Like we have purchased one capital asset. It was taxable at the rate of 18%. We purchased it for 80 lakhs. And as you all know that you need to, if you take that ITC, you need to reverse it in a 5 year span of time. So the 14.4 lakhs, according to 18%, comes out to be that is distributed in 5 years. Now 1 year has passed, and now that capital goods has is now being shifted towards the exempted category. Now it is your part, the I think the taxpayers part, registered users part, that they have to reverse the ITC that has been taken on the goods that now has been exempted. So the amount of 11.52 lakhs, that is, I think that was still not distributed over the rest of the years, it still needed to be reversed. So it's a humble, I think it's an advice from my point of view as a GST expert here, as a speaker also, that businesses must carefully, review the ITC that are eligible, and have preparedness. They should be prepared enough that what, because the reversal obligations are to be done on their part, this has to be channelized, and this has to be done very carefully in an effective manner for all the exempted supplies. So I think I have made my point clear that when are reversals to be made, when we are eligible for refund. So this would definitely be going to help you. And reversals would also help you. Just need to calculate, proper calculations of reversals is also needed to be done. So I think your accountants or your proper tax teams are needed to be taken care of here. And moreover, which this is the linked is the state incentive schemes. I think all the manufacturers and the big jargons who are eligible for the PLI schemes, working in the manufacturing, automobile, telecom, tele the medical, pharmaceuticals, all these industries will definitely be hampered to an extent, because they have mixed rates of systems. Like they have 28% taxation systems, they have life safeguard drugs also that are exempted, they have automobiles also that are charged at 28, they have automobiles charged at 40%. Definitely that will be a drift, their cost of production will increase, and this definitely this would impact their incentives also, that they are entitled to take it, being a manufacturer, and availment from the governments. So I think this is the major thing that the industry is facing these days. And I would like that if you have any such challenge that you need to discuss right now, or need some light over it, you need to highlight it and make an understanding, please feel free to write in the chat box that if you have any such of the queries. I'll take a pause for a moment.
Uh, once again, saying once again, thank you, Kanika. We have a few questions over here. Uh, with respect to invoice being raised related to goods on 15 September with old rates, but the goods received were on 23rd, and the payment was also made on 24th September. Then the new rate will be applicable, so the supplier has to make the credit note related to the GST rate difference. One, that question, and the same credit note will be a financial credit note or the other way around.
First of all, there is a difference between a financial credit note and a credit note. And according to your question, I think your financial credit notes are basically used where the time period of that 1.5 years that is given to you to claim the ITC, that is till 30th November, that has been given by the government also, that you are eligible to claim any ITC in that duration of time. Supposedly, your invoice has been raised for financial year 24 and 25, right? So you are eligible from 1st April 24 to 31st March 25. You have raised any invoice for which any credit note was issued or has been raised. Now you are eligible to claim that reversal, those things, or the reversal of ITCs till 30th November 2025. If you are doing it within that time period, then yes, credit notes are eligible and you can reverse those ITC and reduce your burdens. But if in case the time limit has been exceeded and you did it account for it for a later period, that is after 30th November, then you need to issue a financial credit note. In that case, you cannot reverse the GST amount. You have to bear that much amount. And with that increased liability, only the payment portion for that is liable to be paid to your vendor will be definitely reduced. So this come it will be. The credit note that is being issued is okay, because it has to the new tax rate would be applicable on your transaction. So moving on to the next segment, and that is also very interesting. Like after this 56 GST Council meetings, some of the reforms have also taken to be channelized from the 1st October 2025. And the major, I think, the hot topic and the current topic under GST is streamlining under the IMS. I think you all must be aware, or of you must be having a less idea about it. So basically, I'll just give a glimpse that invoice management system or invoice matching system is now being mandated, And if you need to claim any kind of invoice ITC, that's needed to be accepted, or if you do not need to claim any ITC, that needs to be rejected. That would fall under the bucket where you are going to have your 2B, GSTR 2B. And with that 2B, we're going to float for that particular month in your GSTR 3B. So this is the nutshell mechanism that how it is being followed these days. Here few changes have been made. Some confusions have been, floated rigorously in the market, for which an advisory has also been issued in the last evening, that is 8th October yesterday. So I'll going to put some highlight over that also. But moving on to this, the IMS is basically having a change where you have given an opportunity just to accept and reject the invoices and to park your credits in GSTR 2B. Here, the pending section has been only availed for the credit notes. The upward, amendment, the downward amendment, the credit notes that you have issued, the e-commerce documents, a debit note or invoice, only these particular document set of documents have the chance to get the pending to get it pending, and you need to mark it pending just for 1 month, or that quarter filing if you for 1 quarter or for 1 month. This is the only relaxation or the flexibility that has been given by the government towards us. Second change is there is a myth, or I think a wrong circulation, that there is end of auto population of ITC. I think this has been I think very clearly defined by the given by the instructions have been given through an advisory number 628 issued yesterday by the government, where it is advised that ITC will be auto populated from 2B to 3B. There is no change because of such implementations of IMS. 2B will be generated as it was before on 14th, even after making the changes that you have not incorporated through IMS after 14th. You can regenerate your 2B, and it will be floated towards your 3B. So there is no such change. Do not confuse your mind. This is as it is, as it was. So there is no such kind of end of auto population of ITC. No, this is, I think, if something has been automated by the government, that will not be in hold like this. So this will be done to all these things. I think your query would be addressed with all those mysteries and myths that are prevailing here in the industry or in the market right now. So this is the thing. Another important change is the ITC declaration. Like, suppose I'll just explain it to you through an example. Suppose you have raised an invoice for 1 lakh with GST amount of 1 lakh, and you have just claimed an 80,000 GST of that as an ITC. And after a month or somewhere, the credit note was issued for the full amount. So government is giving you this flexibility that the amount for which you have availed the ITC, 80,000 in our case, you can reverse only 80,000 extent in that credit note. There's no need, though the credit note has been raised for full 1 lakh amount, but it is, I think, advisable that you just reduce it. You can reverse it by 80,000 only. So this has been flexibility, and the same will be rolled out in the IMS. So this is the thing that government has brought in. Another feature that government has brought in is to option to save remarks. Suppose you have the reject or pending invoices, right? So those you can add those remarks over there. Like earlier, I think where automation is being taken place, I'll just add it here, where IMS is being automated, such facilities, as we are conducting this through binary semantics, I'll just add in this thing that this automation has already been done away before, where IMS was launched from our end, that you can issue the partial amount of, you can claim partial amount of ITC, even though it was mandated in IMS. And second thing, you could have given the remarks at each and every section. You could maintain the audit trail. So all these features are already developed way hand before now, which government is including. So this is all the readily available things that we are already working through. So I think if you are, I think, an automation lover, you want your things to be handled very, smoothly and efficiently in just a few clicks time. So I think you can have a demo sessions of GSTrobo also, where you can find that ease and finish of your complicated taxes, of your filing burdens, monthly burdens or quarterly burdens, you with the ease at it. And secondly, the thing is, you can also you can do all those things. And another effective reform is given by the time barred returns. Time barred returns, government is now putting a ceiling, and this is effective from 1st November 2025, that if there are some irregularities being followed by the taxpayers, that they're not filing the returns, then they can file the returns for a pending last 3 years. And if they have quarterly returns for that pending last quarter, we have already mentioned the date, if you could see, for the month September 2022. This is the last month that you can file your return. So please be a little quick or hurry. You can miss out this chance and you could not file, and other would be leading to the penalties and other rigorous, interest and other, repercussions of not violating the laws to such an extent. And as you can see, the government is getting stricter and stricter these days. So please be a little more adherent towards your regulations and laws. And for the quarter also, it is July to September. So I think moreover we have completed and covered a major, I think, reforms here till now, that how the things have been, moving from one stage phase of GST 1.0 to the next phase of GST 2.0. And I think a poll is also being, popping up on my screen. Please go through it, give your suggestions, give your requirements, so that we can also understand that what are your challenges that are you being facing. So accordingly we're going to deal it over. You have just few seconds time, please be a little quick and post it. I hope everybody has posted it. And still, if you have any queries, please, feel free to put it on the chat box. In case it is not addressed here, so don't worry. We'll reach out to you personally addressing your queries. So now, as we've already discussed and given an idea on the automation, and I think technology and automation in India is leading a role, being a role model to other, other countries, other GST models. Though it is saying that we have borrowed this GST system, yes, though we have borrowed it, but yes, we are having a legacy over it. Proud over this and being a proud Indian that yes, managing it through such a mass extent, things are getting automating. We have got an e-invoice where you can just generate your invoices readily like that. And we have this IMS, like where the ITC claiming and things were so confusing. Now you just need to put a click and you can do it. So I think automation starts from the invoice management. As you know, that you like where there are bulk invoices, where there's so much data, you would be wanting that just with a click, things are just, selected and posted of the similar transactions. So I think this is being catered. Here I would also mention that yes, the GSTrobo IMS functionalities are working really very well and gives you all sort of conveniences and all sort of automations. They give you auto reconciliations. If there we give you advanced level of mismatches cases, even the slash and the zero, the hyphen, even if it is missing, we are giving you to that extent also. If there are things these days being faced by a number of users who issue such type of invoices, we have the, seamless integrations of any ERP, even Tally also. Though big companies, big jargons are using SAP and other Oracle and the Business Center Central. So we are also moving from the Tally towards that. We are taking a lead over it. So this is just, you just need to integrate it with your system. You just need to put a click and things are popped up on our portal. Things are prepared on our portal. You just need to click file and things are filed. You just need to click process, the things are processed. Everything is just with one click. You get the dashboards. This is being something new, and I think through the AI technology, how the things are advancing, here the things are tracking that live ITC would be seen, that how much cash flows are being blocked. that how much return filing is not being done. So not only from the company's point of view, to the cash flows level, cash level, to the adherence of laws level, because this is a major challenge that a company follow these days. We also give you vendor rating, that which vendor is not filing their returns, and other comply other vendor rating also, so that you should also know, being such a large company, you're dealing with so many vendors, that which vendor is good for us to business with and which is not. So on that basis, we navigate you to the various analytics that leads to, not through the refunds, through the cash flows, through the ITC, eligible, ineligible, all this bucket in just one product that you can see. And this is only with the help of automation, what government is doing and what we are trying to serve you, just to make your life easy with this technology and automation. And moving on to the next slide, the last, I think the last stage that we can see, it is like action plans. We have discussed so much so far. This is happening. This government has brought. These are the issues. These are the scenarios. But somebody is waiting, like, what to do next? How can we, plan this thing? So for your ease, we have segregate into the short, medium and long term things. Like for the short, it is just with all these reforms and changes, you can make the reconciliations. Currently you just need to be prepared, the reversals thing, the reconciliations, the HSN, HSN coding should be done, the SQs should be properly segregated. So all those things from the accounting point of view, from your software point of view, should be catered in advance. I think most of us has been already done that, because 22nd is already passed. We are just a little, late, little late towards this session. So yeah, so this would be done, I think, till so far. We have already, I think, in the middle of it. So just to have an understanding and a grip of those changes, so that we just not, break any law or any bypass it. And with that 3 to 6 months period, you can think of automation. And I think how the things are moving forward, how the things are getting automated, I think even the small taxpayers, smallest to small taxpayers, is making the use of this automation and making their work easier, because your focus is not only just to get busy in this return filing dates. Your focus is to earn money, you're right, pay taxes and save taxes, so and earn profits, right? So this is the basic agenda of business, and we are here to serve you at any place, at any point, wherever you are feeling hard or something, we are there to serve you. So you can discuss anything. It is just not, we are not having any business with you. You cannot discuss, you can post your queries. We love to answer each of that to you. And for the long term, with how the things have been, IMS have been moved, now you are little automated. Now you can move those things a way ahead through the ERPs, like with just one click, from end, from the invoice generation, insertion to the end, till the returns are filed, all the things are seamless, efficient, and effective. One more thing, I just need to give a, a highlight here, is the IDP. I don't know how many of you know about it. That the this is the document technology. Like here, what it is done. This is not basically used right now, but definitely in, I think, an year or two, this will be like a boom in the market. The major jargons basically face the issue, the invoice management, not in terms of the IMS, it is in terms of like what you're posting. The invoice posting is a biggest challenge, that which head should be there, whether because I think we have very, a very small department with not those qualified people that should be, kept in to enter the invoices, due to which what happens, if the invoice are not, entered correctly with correct specifications, the things are the issue, that we have a fail of taking the ITC. And this is being a major concern. Things are getting automated, and automation not to just only to GST, to a next level. So I think this is the technology we are also serving. You can have a take a look. So I think here we can conclude this session. It was very interactive session with you all, and I hope I have made my things clear to you. Still, in case you have any queries, I think our question and answer session is just open. Please put your queries. We can discuss right away.
Hi, Anirudh. You've raised a question in our question and answer section. I would request you to kindly give us the dates so that we can better answer your questions. In the meantime, I'll ask Shilpa to speak as such and kindly unmute yourself and then you can.
Are you able
Yeah,
to
hi,
hear me?
Shilpa.
Yeah, hi. Hi. I just want to ask in respect of the GST rate changes. In case one of the my product rate reduction from 18% to 5%. So can I do something changes in my grammage? I want to increase my grammage, increase of the my decrease the MRP. Can I increase my grammage instead of decrease the MRP?
Just a second.
Yeah, hi Shilpa.
Hi,
Yeah,
Kanika.
definitely your question. Yeah, hi. Yeah, definitely. I think this is being the biggest challenge of the industry. As I've already mentioned, that industry is still rolling out a solution because grammage and reducing the prices or increasing the grammage because it is just not one thing. So it is still in progress and still not decided yet how the things would be taken care of. But as far as my friends in different industries, what they have suggested and what they are trying to amplify is like they'll going to currently they're not going to do anything. The rates would be as if like for a smaller packs which have a rounding differences and a very smaller amounts, nothing could be done at this case at this stage. So I think if this would have been done, this would have been done. But yes, I think what the things are getting in shape. So I think grammage would be increased. This is one of those resolutions that has been proposed by the industry because we have to also walk through the anti-profiting measures. So as and when this will be decided, we're going to convey this to you.
Okay, but in case section 171 is abolished from the 1st of April 2025,
All right.
so
Yeah.
what should we have to do?
Look, it is just not only the anti-profiting measures, as I already said, need to be followed by the company. There are other
Yeah,
relevant laws and regulations that are still to be done, like Legal Metrology Act, right?
yeah. So there is a chances for the assessment in the future if we are increasing the grammage because the already case laws on the anti-profiteering that the purpose of section 171 is not served if you are increasing the grammage. So what should we do right now? Because there is no anti-profiteering case entered after the 1st of April 2025. So what should we do? Because GSTA is there. So GSTA can any time raise the question or that. So
I
what will be the safest
understand.
idea?
Yeah, I understand your concern and your grievance also because as anti-profiting, has been removed from April, but
Yeah.
still, industry has proposed some resolutions to the government, and we are still awaiting for their response that how the things will be tackled in such kind of scenarios, right? So this is not only because the thing from any industry point of view. I think the FMCG and the consumables would be the most hardest to be impacted over this. So we are still awaiting for this, response from the government and that what resolution they are proposing for the best interest.
Yeah, for up to the date, we just wait and watch. So they stop the
Surely,
production.
I
Yeah.
think 2026 is the timeline which you have the if you have the current stock inventory is already been maintained. So that much relaxation has been given by the government that you just need to impose your new stickers over that and you can change it. And as far as what I have come across that they are just revising the prices and they are making it up to that amount. Currently, they are doing that only.
Okay. Thank you, Ganinga, for the wonderful explanation.
Thank you.
Anirudh, I would request you to also share your details so that we can go ahead.
Good evening, madam. Actually, in the last year, we have supplied the material to Ashok Leyland and Tata Motors at the rate of 28% GST. And in the current financial year, we are going to raise supplementary invoice. But when we discussed with the concerned person of the Tata Motors and Ashok Leyland, they are asking to raise 18% GST as per the GST rationalization. So, could you please update on the exact status that 28% shall be applicable or the 18% shall be applicable.
All right. So I think you have made the, I think you have supplied that article to them.
Yes, we are the supplier.
Am I audible?
Yes, yes,
Yeah, all right. I just needed to know that, I just needed to understand the case scenario again. It is like you have supplied something to Ashok Leyland in the
yes,
year 24
yes,
25, right?
yes, yes.
Which has been taxed at 28%,
Right,
correct?
right.
The payments have been received.
All payments have been received.
All right. The goods have been supplied.
Yes,
Everything has been completed to that part, right? So I
right.
think if that transaction is completed in that scenario, now they want to return that good.
No, 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 no. They do not want to return the goods. Actually, we want to raise supplementary invoice, debit note. Because last time we have supplied any material at the cost of rupees 100,
All
and
right.
now in the financial year 24-25 they have increased 5 rupees per unit per piece, so that we need to raise supplementary invoice 5 rupees per unit.
24 25 or 25 26? 24
No,
25 has
in the
already been
current
crossed.
financial year, we need
Hmm.
to raise supplementary invoice debit note, which
Hmm.
invoice pertains to financial year 24-25. Actually, original invoice is financial year 24-25, but we need to raise in the financial year 25-26.
And the same has been proposed in your agreement as well.
Yes,
Okay, so I think with the revised invoice, and I think this set of transaction is like has been issued for the credit note and debit note. Still, there are ambiguities, but to my experience, I would suggest that if you are raising a separate invoice, or you can raise a separate invoice for that inflated amount, as we have already considered that case. This will be an upgradation, right? So I think with the new tax rates, you need to issue that thing.
okay. That means 18% GST shall be
Yes,
applicable.
because the whole transaction has been completed, correct? You have
Okay,
upgraded that amount, you have revised those prices for this financial year, having a retrospective effect, correct?
okay.
So effectively, and this is being done post 22nd September.
But madam, just now we have seen that the section 14 of the CGST Act, time of supply.
True,
If supply is supply before and invoice issued is before and also payment receipt is before, so
true.
GST rate shall be old
Old
one,
rates,
old.
correct,
So
correct.
suppose we have raised GST 20% in the financial year 24-25. So as
True.
per my the opinion, it should be 28%, but I don't know we will charge to 18% or 28%.
As it is a supplementary invoice, right?
All
This is
right.
a separate set of transaction. And as you have come across, if you raise any debit note, it is not a credit note. And as you're already aware of the debit note in terms of CGST Act, that debit note is a separate transaction, right? It is
Okay.
being going to count it from that point of date from which it is generated. So that's
Okay.
why debit notes have been, continuously removed from that section, that where invoice and debit notes were treated from the same date. Because debit notes, this was the usual case that industry was facing, that debit notes were issued at that point of time. So that is why they're not able to claim the ITC. So this was already catered by the government. Still, there are ambiguities. Like you have a mixed opinion. So according to these things, I think the new rate should be applicable. And
Hmm.
let's see what government has to still clarify, because they have already mentioned that they're going to post some, FAQs or some advisory with regard to such a kind of ambiguities in these credit note and debit note issuance.
So we have another question wherein Sunita has asked that they have purchased the material on August, but if they want to return goods on October, which rate of will be applicable for their debit note?
Yeah, hi Sunita. I have seen your query. I just needed to know that you have purchased some material, and I think invoices would have, what I assume that invoice would have been given you in August only, and you have made the, I think, this thing in August only, right? You can also give us this query. We can handle it separately, and we're going to respond accordingly. So I guess I think thank you for this, interactive sessions, and I hope we have addressed your queries to the maximum extent we can. I still say that you can raise your queries still awaiting. We can definitely serve you there also and reply you there.
Thank you, everyone. And thank you, Kanika, for such a deep dive walkthrough and for breaking down the complex reform into a clear, actionable insights. As we've seen today, GST 2.0 is not just a policy shift, it's a vision in motion to make Indian tax systems smarter, faster, and simpler. At Binary Semantics, we are proud to enable this transition through our tax tech platform, GSTrobo. It is designed to empower tax teams with real-time reconciliation, automated return filing, and AI-powered accuracy, fully aligned with the IMS and GST 2.0 standards. If you like more support, we can have this session again, and we are happy to connect with you through our website, and you can write to us over our marketing at the rate binarysemantics.com, or you can visit our website. On this note, I would like to thank you everyone for your for your great participation and your continued engagement with the evolving world of GST. Thank you and have a nice day.